So how do you know if a property is worth investing in? There's a few things that you got to consider when you're making this determination. The first thing is the current market value of the property. The current market value of the property is not the assessed value or what the properties were selling for 2 years ago. The current market value is what you can expect to sell your property for today. So the best way to find out what the current market value is to go back a few months and see what the recent sales in the area were. You want to compare apples to apples, so find properties that are similar to the property you're looking at and see what they sold for in the last few months. That's going to give you an idea of what you can sell your property for once you buy it. The second thing you want to consider is any liens or obligations on the property. So any back taxes, any mortgages if there's any, those are all things that are going to be recorded with the county. You can look them up with the county recorder and you'll see if the property has anything that is owed to it that you'll need to deal with. Third, you want to account for your profit, obviously. You want to make a profit on this deal and you want to account for that up front. But aside from that, you also want to account for your exit strategy because you might want to make your profit by selling the property in cash. And if you want to do that quickly, you might have to sell it at a little bit of a discount. So you want to account for that. Or if you want to sell your property on terms or owner financing, you also want to account for that because you probably want to make some profit either with the down payment or within a few payments of selling the property. So you want to think of these three things up front when you before you go to make an offer. So let me give you a quick example. If the market value of a property is $22,000 and you find that there's also $2,000 in liens, and let's say that there's $450 in back taxes owed on the property, what you want to offer is your maximum offer needs to be around 18%. That's your maximum offer. But you also are excluding the amount that you have to pay. So the $2,000 and the $450 that you're going to have to deal with, you're excluding that from your 18%. So what you're actually giving to the seller is around $1,500. If you do that kind of a deal, your profit when you go to sell it at $22,000, you're going to make $18,040 if you sell it for cash. And if you sell it on terms, and let's say that you require a 20% down payment, your profit right with the down payment is going to be $440, which is not a lot, but again, you're making this in just the down payment. The rest of your money you're going to make in monthly payments over time. So when your buyer makes these payments over time, all that money coming in is just pure profit. So in this particular case, if you go through these numbers here, then you have a deal. But you want to go through these numbers and see if you have a deal or not. Aside from that, you get detailed information with the course that you purchase. So for instance, if you purchased the Land Profit Generator course, there's what's called an offer worksheet. And that's like a calculator. You can just plug in your numbers and it will tell you what you should offer and if you have a deal or not. If you don't have the Land Profit Generator, you can purchase it by going to landprofitgenerator.com. If you have the Hidden Tax Sale Cash course, there is a document or a calculator in there called the Deal Analyzer under Sample Forms and Documents. And you can use that the same way. It tells you if you have a deal or not, tells you what you should offer and how that works. If you don't have the Hidden Tax Sale Cash course, then you can also get the details on that and purchase it through the Hidden Tax Sale Cash.com site.